With this part 2 of the week 5, we are going to actually look at some tax return items. We're going to look at a couple review things from last week where we added in income, and then we're going to look at the we will have Social Security. We are going to look at the adjustments to your AGI. Remember, those are adjustments that are called above the line deductions before your adjusted gross income. Okay, so what you should have pulled up are these two documents from, and you get these in the IVY Learn. We got the practice return for Jack Summers, and then the documents that go along with Jack Summers, the W-2, and he has a couple 1099s, and we're going to put those in as we go through. All right, I've already got this tax return pretty well filled out, but I'm going to go through each item, and I didn't want to have to waste time typing in the amounts. And so we can go through and talk through this in a little bit quicker way. If I were you, I would kind of go through and get some of the beginning information put in, and then you can walk through with me as we complete this tax return. All right, so I'm going to go through and kind of figure out the important parts and things that we need and won't need. So of course we'll need his opening information. He does have a son, John. John lives with him for 10 months of the year, but John's mother can claim his dependency. That's fine. We definitely need to know that. But since John lives with the father, Jack, then Jack can still claim head of household, even though the mother gets to claim his dependency and his child tax credit, as we will talk about that in a couple weeks. But even though she gets to claim those two items, Jack can potentially still claim head of household, earned income credit if he qualifies, and any child dependent care if there would happen to have been any. So there are three things that Jack can still claim by having his son over half the year. So we go down through, Jack had a refund from the state taxes last year of $980. Jack itemized last year. He's not going to this year. But since he did itemize, then all of that is taxable, so we will need to put that in. We got some hobby income. We will put this in as a hobby and not as a sole proprietor with his own job. We could do it both ways and see which way comes out better. But because it's a hobby, he can only claim the income. He cannot claim these deductions unless he does itemize. And we're not going to be itemizing this week. That's for next week. So we're going to have to claim all $3,100. If we did this as his own business, he could take these deductions. But even with those deductions, since he'll have to pay the Social Security and Medicare portions for both him and the employer part, it's going to take us over, and he's going to have to actually pay more as a Schedule C as a sole proprietor than he would just claiming this small amount as a hobby income. He receives $500 of child support. That's extra information. We don't not need to know that because that is not taxable. He had a job. He moved from his old job to a new job, and we did this example in our part 1 of the lecture where he moves from Anderson to Evansville. So that is allowed because of meeting the distance test. So we will be able to take these as a deduction. All of them except, of course, the food. We can't take that one. We'll put in his IRA amount. And let's see, he put in $1,200 into his IRA, and he also put in $1,700 into his child's 529 plan. If you recall back to our part 1 of the lecture, nothing was mentioned about any 529 plan deductions. That's because they're not allowed for federal. A Section 529 plan is where you put money into a kid's account, and then they can use that money for college or potentially other type of schooling. But mainly that's what it's for. You don't get a deduction for it for federal, but when the kid takes it out, they do not have to pay any taxes on it, which includes any of the earnings. It's kind of like a Roth IRA that we'll discuss in a couple weeks. Now, for the state of Indiana, this would be important if we were filing the state tax, because for state taxes, we do get a little bit of a discount, a little bit of a deduction for putting money into a 529. But for federal purposes, what we're doing in this class, you do not get a deduction for putting money into that. So then these are the type of questions that I want us to be able to answer, and these are the type of questions that I will have for the quizzes when you actually prepare the homework, the tax return for homework. These are the type of questions that I would want you to be able to answer. All right, so let's go through. Let's put in the beginning information. If you haven't done that, go ahead and start that. Get up through putting in John, and then I'm going to show you what we have to do for John to not count him as a dependent, but still list him on our return, so we can file as head of household. So if you haven't gone ahead and do that, go ahead and do that. Pause this video, and then I'm going to come back with the tax return up. Okay, here's the tax return. I'm going to kind of have to bring up the different screens as we need them. So I've got his basic information in, and I'm also going to come down and put in the dependent. Notice the dependent isn't showing up here. I still have the head of household checked up here in the filing section, but I want to go ahead and click in here and put in the dependent even though he's not going to be listed. So here you can see I did put in John. Here's John's information. Everything is as you would have done in week 3. Name, social security, date of birth, what he is, but the dependent type is the key point here. We need to put that he's a non-dependent qualifying person, because usually we would have put child who lived with you. If the mom would actually put this one, child who lived with someone else, because the child lived with our person, Jack, but she's still able to claim him. So she would have to click this one. We are going to be clicking this one because this will tell us that we can claim head of household and EIC and or dependent care credit, but it will not show up as a dependent on our list to give us the dependent exemption. Everything else is pretty much the same. 10 months lived in the year, or lived. We didn't have any daycare expenses, so we didn't have to put anything here. We're now ready to go ahead and put in the W-2 information. I usually like to get back to the 1040 every time if I can to help kind of center me and figure out where I'm at. So I go back to the, oh, that's not the 1040. Go all the way up. Got our 1040 here. Every time that you need to catch up, go ahead and pause the video. Again, you should not see the name showing up here. If you do see John's name, then you didn't fill in that one line correctly. Now let's go ahead and put in our wages. So let's go ahead and add a copy for our W-2. I went ahead and I already have this done. So I put in the employer identification number, the name of the business, and then the W-2 just as it's showing up here, including the bottom section, which shows our state income tax and local withholdings. That's pretty straightforward. So that one's done. So take your time, pause this, enter in your W-2, and then we'll be ready to enter in this dividend. So I'm ready to enter in the dividend. You can go back to the 1040, or since we are in the documents received section of this form tree here, I can look down for the most common forms, and yes, there is a 1099 div. So you can click here, or if it's easier for you, you can go back to the 1040 and go to the dividend section. Click on the little folder, and it's going to take us here to Schedule B. We need to scroll down to the second part where it has the dividends. Click on the amount, and then it's going to take us to one more page. It's going to take us to that 1099 div that I had showed you previously when we were over here in the form tree. Now this is right back to where we would have been if we would have just clicked here in the first place. Either way, it works out. You can do it either way. Whatever way makes it more easier for you. All right, with the 1099 div, this is pretty easy. We just want to put in the two amounts, the ordinary dividends, and then how much of those ordinary dividends are considered qualified. All of them are. So that's going to help him out on his tax return. He's going to pay a reduced rate on those dividends than he would have normally paid if they were not considered qualified. We can then come down. We got the 1099 INT. 1099 INT is another one of those common forms that you should find over here. So let's go ahead and click on that. I think there was 2 of them. All right, this first one, the Bank of America, very simple one, just $300 of interest income earned. But notice then on the second one, it looks like we had some kind of a bond. This was through the city of Anderson, and this $600 down here is considered tax exempt. So that's tax-free interest. We still need to put it on our return though, because that tax exempt will could potentially make it will come up, and it will be used in different calculations for different items, even though it's not going to be taxable. So I do want to create another 1099 INT for the city of Anderson and put in that 600 down here as tax exempt interest. Once I've done the interest and the dividends, I want to go back up to the 1040 and make sure it all went in correctly. So I want to make sure, did I really have 28,000 in taxable income, box 1 of my W2. So I'll go back up. Yep, there it is, the box 1, 28,000. 300 was my taxable interest. Yep, I remember that from the Bank of America. 600 tax exempt from the city of Anderson. And then 1,200 for my qualifying dividends. Now I can continue to go down on my sheet here, and my next one is Social Security, but I also remember when I was reading through this that I had some Indiana tax refund from last year, $980. So I want to go ahead and put that into my return now, because that's the next line I'm coming to. I like to do things in order like that. So this 980, a lot of times people will put in the 980, but it won't actually show up if they would check their return later. It's not showing up there in line 10. What the reason is, they put the 980 here, but you have to check this box. If you don't check this box to show that it's fully taxable, it will not show up on the 1040. So now that I put the 980 in and I've checked this box, I don't need to do anything else. I can just click the back button, and that 980 will appear on line 10. Now I can go ahead and put in my Social Security information. I made 10,000 or earned 10,000 in Social Security. So I need to come down to my Social Security line here, line 20. Okay, if it's a blue box, that means I still need to click further. Here is my actual input sheet where I put in the full amount that was earned. How much of taxes were taken out, $600 were withheld, and then how much went to Medicaid Part B or Part D, and that is showing here in Medicare premiums. I said Medicaid, but I meant Medicare. So now the program, if you remember back to last week, it's going to know, do I take 50% and make it taxable? Is it going to be less than that? 50%, is it going to be 85%? It actually goes through that here for you. And it's going to calculate out through all these different calculations. It says, okay, of the 10,000, we are going to tax you on 7135. They did the calculation for us instead of us having to do it. So 7135 out of the 10 is going to be taxable. Now this last item here, remember back we had some judging income. $3,100 in judging income. So I want to go ahead and put that in. I look through here, other income, it doesn't show up right away. I need to continually to scroll down, but you will find it here on line 24, hobby income. I do need to put the entire amount, $3,100. You do not get to take any deductions here. If you wanted to try it as a sole business, as a sole proprietor, you could fill out the Schedule C. I'm not going to do that here. It does end up costing you more. In this case, since it is a small amount, it is better to go ahead and list it as a hobby. All right, we did have some moving expenses. Now with the moving expenses, there are a few things you have to do. Otherwise, the moving expenses is another item that will not show up. The first thing you have to do is we have to click on this begin here. If you do not do this, then your moving expenses will not show up even though you put them down here. First thing we need to do is figure out the distance from our old home to our new workplace. So think Anderson to Evansville. I estimated at 350 miles. It may be even more, like 200 miles. It doesn't matter. Let's put in 200. Enter the numbers from your old home to your old workplace. I just give an estimate of 30 miles. So that's 170. And it says, is line 3 at least 50 miles? And the answer is yes. When I subtract those two, it is still more than 50. So I can continue to go on. Am I there at least 39 weeks? We want to click yes. Once I have done that, I can click back. Now I can enter in my information, the amounts. So I can enter in, I had 500 for the moving truck and 250 in gas receipts. So I can enter that here, $750 in transportation costs. And then in actual lodging, I said it was 130. And then I had meals in there as well, but we do not include meals. So simply the 750 plus the 130 is 880. If I have done everything then correctly by going into this folder first, that 880 should show up now on line 26 as a moving expense. The next item I came to was the IRA. This one, remember, we did not do anything with. This was child support. We just took care of the moving. Now I'm at the IRA. We had $1,200 that we put into it. Okay, so total IRA contributions you made, I can simply fill in the $1,200 right here, noting that the max that they'll possibly allow is $5,500. We're fine. We can do that. So as long as I put the $1,200 in there, that's really all you got to do. It's going to show up here that you did have an IRA deduction of $1,200. The last thing that I come to and the last item that I have on my tax forms is my student loan interest. This was $660. I get to take the entire amount. I'm not over any kind of income limits. The only thing I need to do here is put in that $660 here in my student loan worksheet. It does all the calculations for us to make sure that we didn't hit any phase outs. At this point, you should have everything entered. Remember, we don't do anything for the 529 deduction that we put money into. There is no place on the 1040 to do that. That's only for the state of Indiana. So when you are all said and done, you should have a federal refund of $827. That includes having our standard deduction as a head of household, $9,300. We did not have enough to do anything with itemized. Take out our exemptions. Now, let's see here, our exemptions of $8,100. That's the only thing that surprises me a little bit. We should not have any exemptions. For some reason, this thing is counting me as having a spouse, and I do not know what. There we go. So your refund, I'm sorry, it should not have been the $800. I don't know why the spouse was checked there. The refund should have only be $220 because Jack is single, claiming head of household. $220. And the reason, good thing I was checking through this because I knew that this number was okay, but this number should have not been $8,100 because that means 2 exemptions were claimed, and I knew we only had the one because the son isn't allowed. It did show me the son wasn't being allowed, but it showed me that I had a spouse, an imaginary spouse being claimed on there. So that took us down to $4,000. That's going to lower our refund, obviously. We'll talk about different types of credits later. We actually did qualify for a little bit of earned income credit, which was nice. That actually took us, if we didn't have that, we would have pretty much broke even. We ended up with a $220 refund because we owed $27.31. And we paid in, when we take it the EIC, we paid in $29.51. So the difference there is $220. We actually did get a little bit of retirement savings credit, and we'll talk a lot more about that coming in week 7 when we talk about credits, why that's there. All right, if you got a refund of $220, you did Looks like you did everything great, and you should be ready to do your homework on the tax returns. We can then go through, and as the last thing that I had on here is we could begin to answer all of these quiz type questions. His filing status will be head of household. How much taxable income does Jack have? Well, let's go back and answer that one as well. Taxable income is right. Oh, that's total income. I asked for taxable, I believe. Let me make sure. Yeah, how much taxable income does Jack have? So we would look at line right here, 43, taxable income of 24,625. And then I tell us how much of this taxable income will be taxed at normal rates and how much will, and use the back of the book tables, and then what's left. We could actually look at how this tax is done, but if you just want the real quick answer, the taxable income in the back of the books, they're not going to use 24,625. They would use that if we didn't have this, the qualified dividends. So the amount that they're going to look up in the back of the book is 24,625 less $1,200. That $1,200 is going to be taxed differently. It's going to be taxed at either 0 or 15 or 20%, depending on his rate. And he's in that lower rate, so he will be taxed at that 0%. He's not taxed on that dividend income because it is considered qualified. You could click on this and see how that works out as well. Let's see where they do that down here. The tax. We can see here on the Schedule D where they take out. I think it's going to show us. No, but we did have this qualified gain. Where they actually do the tax, I know that you can find that somewhere where they calculate this amount. I just don't remember off the top of my head where it was. Anyway, the amount would be $1,200 less that they actually look in the back of the book. Let's answer the rest of these questions. Does the 600 admissible bond interest play any part in any calculations? And the answer is yes, it does play a part. And I'll show you where it played a part. If you remember back to a lecture last week, it does play a part in our Social Security calculations. The $600 right here, this is where it went into play. They added in the amount, if any, from the 1040 line 8B, which is your tax-exempt interest. So it was important that we had that in there. Next, how much should be shown in box 10? That was the amount of the Indiana refund that we got back. So box for line 10, it should be the $980. That shouldn't say box, it should say line 10. How much Social Security is taxable? We just did that. It was $7,135. How much should be listed in line 21? That's the hobby income of $3,100. How much child support should be listed as taxable? That should be 0. Where is the child support listed? It's not listed anywhere. How much should be listed for line 26? All right, line 26, your moving expenses. We can list the $880 that are allowed as a deduction, not including the food. How much can he deduct for his IRA contribution? He can deduct all of his. He did not meet any of the phase-out limits, so he gets to take the full $1,200. And the student loan interest, he can take the full $660. I didn't even ask that. Oh, I did here down here, line 33. How much can he deduct for his 529 plan? Nothing for federal purposes. And is he entitled to earned income credit? And the answer was yes. He barely hit the cutoff that he was allowed. We're going to talk about earned income credit in 2 weeks to learn more about that, but we could see that on the tax return when we went down here towards the bottom. Line 66A, here is his earned income credit. All right, that takes us to the end of this section. If you make sure you send me your tax returns and your homework. The quizzes will be just like how I showed you when you answer the tax return homework. Send me those answers, and I will review them as long as I get it by the deadline. With that, I will see you next week in week 6.